this meeting so that we can hear what you're doing in the lives of each one of us, and especially in equity and the way forward for the future. We commend those who are going to guide us in this meeting into your hands, and at the end of it all, that you will be honored by what we do for the benefit of your people. We ask this in Christ's name. Amen.
Thank you very much, Canon. I want to use the opportunity to invite our team leader, Dr. James Mwangi, to come and speak to us. James.
Thank you very much, Alex. We're really glad to have all of you this evening. As you know, we normally hold a press and briefings, investor briefing on our 9th floor. But today we thought it's a very significant announcement we wanted to make. And for that reason, as you can see, next to me is the group chair of the bank. And essentially, too, because we feel this is a major milestone for the bank, we also thought we have this venue so that we can invite you to celebrate with us by toasting champagne. After this, have a glass of wine, and if possible, for those who don't, who not need to be released to go and break the news to the world, then we can have another dinner. So we are very excited, and thank you, Chairman, for making it this afternoon to be with us. I'm sure all of you know our long journey, our aspirations, our dreams, and to a great extent, our commitment to this cause of Equity Bank. Equity Bank, as we have always said, is more of a movement of socio-economic transformation of the African continent. It's a story about our people. It's a story and a narrative about ourselves, told by ourselves, as opposed to what we have had in the past. Our stories are being told by others. It's a mere reflection of our failures and our successes, and our effort as a people to change the course of this continent. This announcement then follows that ambition, that commitment. The time has come for us to fulfill the expectations of our people. About 3 months ago, we had the privilege and honor of being granted approval for a strategic plan for the next 10 years by the shareholders, and committing enormous resources to us so as to achieve that dream. Those resources have seen us enhance the capability and competence of the bank. And we now can say the team that we had been mandated to build at the group level is ready. So we have a holding company that is fully staffed, but which is not operational. Its principal mandate was to look for opportunities for investment and to do oversight of the investments that the group hold. Today, we come because that group has put itself on their best foot forward to identify opportunities so that they start fulfilling that mandate of being in 15 countries within the next 10 years. They are committed to demonstrate that it was not just an aspiration, but it's an aspiration that they were well prepared to, and that they are up to the task of fulfilling that mandate. It is a demonstration of the commitment that equity is not about Kenya, it's not about East Africa, it's about Africa. And our commitment to confront the challenges that may be out there, because that team is not naive. It's aware that there is risk out there, but they feel they have the capacity and capability to manage the risks that would go with expansion. So today we announce the objective of making the first step outside East Africa become a reality, subject to the approval of the regulatory authorities. The country that has come to mind at first is what we could call our best shot, a country that all of us desired would ever be given an opportunity, not because it provides us with enormous opportunities that would really make the opportunity we have in East Africa eventually look humble, but more importantly, because our success in that country would make significant impact in improving the lives of the people in this part of Africa. It's a country that gives us a significant size of population, that if we impacted them, if we improved their lives, then truly would be moving not just the second arm of the transformation of African croc, but maybe the hour arm. And if not the arm, then we will have moved the minute's arm of our objective. That country not only provides us challenges, but gives us an opportunity also to test our resilience as a people, as a management team. It tests how global this team is in terms of capability and competence. Sometimes it's good to start with a challenge, because if you overcome a challenge, it gives you confidence that the other 9 countries will be that much easier. That country is none other than DRC Congo. What attracts us in DRC Congo is approximately 85 million people who are significantly excluded from financial services. Only 4% of the population of Congo have bank accounts. This is a country that also at the moment is registering a 9% growth rate. So you could say the weed is growing strong and can easily support any boat whose sail is up, and equity sail is always up. So we believe it will be that easy because of 96% of the population not being banked. 85 million people, 96% not banked, 9% GDP growth rate. That is the opportunity that has attracted us. We are seeing a country whose population is larger than the population of Kenya and Tanzania put it together. That's the opportunity we are seeing. But it's the wealth of this country that also gives us hope that we can contribute more to stabilizing and achieving peace in that country, because conflict is always about resource allocation. People are always conflicting. So if we go and do what we have done in Kenya, do dissemination or disintermediation, the way we have done it in Kenya, bring every Congolese on the table of resource allocation, take away from those who have and give to those who don't have at a price of just the normal interest rates that we give in Kenya, we may see lasting peace being achieved. So we're not just going to contribute to development, but we also believe we'll contribute to eventual peace in that country. The empowerment of the Congolese to be able to exploit their resources, it's something that also motivates us. We have learned, particularly from Kenya, how an empowered people can drive their economy. Now, Kenyans are now driving, to a great extent, the economy of Kenya. And it's simply by empowering them with the resources, allocating them resources so that they can all achieve their dreams. So that is really what motivates us to think about Congo. As we think Congo, we are also cognizant that there are challenges. And one of the challenges that we see is the question of infrastructure. Congo, as they say, is Europe minus infrastructure. So we are cognizant of that challenge. But Kenya has given us the privilege of testing resilience in regions that infrastructure is not hardy, like we have done in northern Kenya. We now have 8 branches in northern Kenya, and the challenges, I would compare them with those of DRC. But we are banking and supporting approximately 1.2 million families in that region with 9 branches. So the formula that we have applied to ensure people in Mandela, Moyale, Wajir, Rodua, Turkana, Marsabit, Saburu, Malalal are banked would be what would apply there. We have learned a lot about mobile banking, and we are very excited that our mobile partner, Airtel, is the biggest telecom in DRC Congo. And the infrastructure required, we're also lucky that our anchor shareholder, Helios, owns and manages the Helios Towers in DRC. That infrastructure, we believe, is available to us to use and to bridge distance and at the same time overcome the challenges of infrastructure. We're also cognizant that beyond infrastructure, there is a question of political challenges, but we have learned good lessons in South Sudan. When war broke, current challenges broke in South Sudan, we only had a balance sheet of 12 billion shillings. 1.5 years later, the balance sheet of Equity Bank has hit 30 billion shillings on deposits alone. We are 33 billion once you put capital. We have grown nearly 3 times during a year of crisis. We have realized in a crisis environment, what you really need is to win the trust of the people, that you are the safe, secure place, and capital flows from elsewhere to you. That lesson will be very valuable for us in DRC Congo. We've had, yes, many issues may arise from Congo language, but we have also analyzed the country sufficiently and realized 1/3 of the country speak Swahili. And that 1/3 of the country borders South Sudan, Uganda, Rwanda, and partially Tanzania, all Swahili-speaking nations. And across the border, we have almost a branch in every point. Those will be handy to deal with the eastern side of DRC. We're also very excited that despite the challenges of instability that people may talk about, if there are any, we don't understand the depth of them, that this is a country that is fully dollarized. So the issue of exchange risks and volatility that goes with instability in terms of exchange risk then doesn't exist, because the balance sheet we'll be dealing with is in dollars. And most of the African countries are pegged into the dollars. On the contrary, we see that as one of the biggest opportunities we have, because it's with the size of that country, we could easily counter the exchange risk of Tanzania, Rwanda, and Uganda and South Sudan, which are translated into Kenya shillings on a benchmark of the US dollar. So we only need to grow DRC to the size of the combined effort of the subsidiaries, and any negative impact of foreign currency or exchange rate is neutralized. And we are very excited that this opportunity would be coming to us in that perspective. And we see it as really impactful in entering this country. We have also realized from our experience of the past, the 4 subsidiaries we have in South Sudan, Uganda, Rwanda, and Tanzania, that success requires investment in people, getting the right people with the right attitude, with the right value systems, and whose philosophies and ethos are shared with you. And this is one factor we've put into consideration to ensure we are successful in DRC. We've also realized that it's a different culture, and we have realized that we have to adapt ourselves to culture. To ensure we fully adapt ourselves to such cultural differences, we've ensured that the holding company is multicultural, multilingual, and to a great extent, a global team devoid of the strength of the Kenyan culture, so that it becomes easier for us to marry. So when you look at the holding company, and you look at Elmer, maybe you may start, he brings the German culture. When you look at Charlie, where is Charlie? Charlie brings the Indian culture into the leadership team. When you look at Anthony, where is Anthony? He brings the Nigerian culture on our leadership team. When you look at John Stanley, he brings the South African culture. Is John at the back. When you look at the other Anthony, he brings the Ugandan culture at the holding group. And I bring the Kenyan culture to that group. So you can see a rainbow of a management team that has no singular centric culture. It's open to any globalized. And we have learned the art of values. Jumane brings a culture from Latin America. Of which country? Guyana. And of course, Rohit brings, I'm not sure whether it's the Middle East culture, but when Charlie brings the Southern India culture, Rohit brings the Northern India culture. India for us is a continent. So we have learned how to deal with the diversity in culture. So this is what we pray to the challenges that we have analyzed, that we seem to have identified out there. You may say there are challenges on the eastern side, but remember, we were in Mpeketoni, and we rebuilt Mpeketoni. And Mpeketoni is now fully reopened, fully reconstructed. We have learned how to cope with such circumstances. And business continuity has become something that we fully appreciate. We are in Mandela and we are fully open, and Mandela can challenge any branch in central Kenya in terms of business and in terms of performance. We are in Garissa as we speak, and we are doing well, and we remain open. The agency network, that we now have 20,000 agents, we have learned a lot, and we believe DRC would be very ripe for. We've had a long history of partnership with the Central Bank of DR. They've been to our office twice, and so we understand the regulatory framework in DR, and we're able to. So it is a willing investment and a willing acceptance from DRC. The government of DRC, the Central Bank of DRC, understand the role that equity can play in the transformation of the financial sector. So it's on that basis that we are very confident as we approach DRC. The greatest thing we see is the opportunity to learn. We are young management. On hindsight, will be wiser. We have learned a lot from South Sudan, Uganda, Rwanda, and Tanzania. And it's those skills, it's those competencies, it's that knowledge, it's that wisdom of the last 9 years since we established ourselves in Uganda that we'll be putting into play to ensure we succeed. Now, let me come down to the entry strategy. DRC is a big country with the 4 main languages spoken in the country. None of them is our dialects. We knew we needed people who could understand culture. We scanned the 18 banks in the country and realized this environment is suitable for banking. That's how that picture demonstrates how DRC looks. If you look at the upper orange, I think that is Lingala. If you look at the very right color, that is Swahili. If you go to the deep what? Lead. Is that lead? Men, we are said to be colorblind. So I'm always cautious. Again, that is where you now have Congolese language and a lot of French. And in the middle, where we have the circle, it's another language. So essentially, we realized we needed a strategy that would be able to penetrate those markets. But as we saw that, we were encouraged by the 9% GDP growth rate and an inflation of 1%. You go to a country with 0.8, 1.2 growth rate, US dollar, 34 billion. That's almost the size of Tanzania. People underestimate. It's not just the potential, but it's a country. So basically, we have scanned that. So we said we'll understand the country. And as you can see, and I want to pay tribute to our friend Mackenzie. Mackenzie has detailed this country in a way we could never have understood. So the economic overview, and you can turn to the next page, Alex. Again, if you look at the microeconomic indicators, the consistency, the prospects of the future, the forecast, look at debt service to export 20, very, very low. When you look at GDP growth rate, the forecast, sustainable. Even with an election year, you are still anticipating 8.2 GDP, real GDP growth rate. Then you start realizing even that with an election at an inflation of 4.7 is still lower than Kenya. That's the country we are talking about. And if you go to the next page, Alex, and look at the banking sector, because this is the most important. The banking sector is what we are focusing on. 53%, the penetration in Kenya is 53%. DRC, only 19%. When you look at the growth of the banking sector, Kenya, we are growing at around 11%, the same with Nigeria. But look at Congo's growth rate, 30% year on year on. If Equity Bank is growing its balance sheet in Kenya at 25, when the average growth rate of the industry is 12, 11%, you can imagine what we anticipate to happen where the banking industry is growing at 30%. We have set ourselves a growth rate of 70% compounded for the first 5 years. That is the anticipation. And when you look at the ability to finance that, I look at the interest margins and the opportunity for equity. We are used to an interest margin of 10%. The interest margin for the market in DRC is 21%. And it's 21% not in Kenya shillings, it's 21% in US dollars. And that again gives you the opportunity. When you look at the industry, 54% of the banks in DRC are family-owned banks. So you could imagine how uncompetitive such a market is when you compare to listed corporate public banks with resources and capabilities beyond the resources of a family, how much you could do. We're very excited that the top 5 banks in DRC are all family businesses. Very excited, because at least we know who we can beat and who we can't beat. From our experience in Kenya, we are reminded that 25 years ago we were number 66 out of 66. The good thing is DRC looks like Kenya in 1990. And we're saying 1990. This is a huge opportunity for us to do what we have done, avoiding all the mistakes we have made over the last 25 years. And that is what is inspiring us to think DRC. In terms of entry, we have decided that this country is too big to do a greenfield. It's too big to do a greenfield. We have decided the best option is to go through mergers and acquisition, and we acquire a bank. We have analyzed the 18 banks to the letter. And I can see some looking at me and saying, James, tell us a little bit about your experience of Uganda. I was young and ambitious. I'm older and on hindsight, wiser. I've always said we have paid an enormous amount of money to learn the lessons we learned with Uganda. It's now time to make use of that investment. We've learned a lot. We have asked Pricewaterhouse, we've asked Professor Margaret Robinson to study and document all the mistakes we made in acquisitions in Uganda. We now have an opportunity to avoid all the mistakes we made in Uganda and do an acquisition that will bring great shareholders' value to Equity Bank. This is my first opportunity as a team leader of Equity Bank to redeem my experience with Uganda. As you can see, I have a Ugandan there who is in my office in charge of subsidiaries, because we needed to use the hindsight knowledge of Uganda before we do this transaction. So you can imagine how conscious we are that we have to do an acquisition, how we need to do it. And so the acquisition we have chosen is the 7th biggest bank in DRC. Slow down, Alex, I'll tell you when to move. It's the biggest international bank in DRC. It's a bank that has withered the experience there for the last 10 years. And it's a bank that we have looked, it has what it takes and is compatible with Equity, both in values, in culture, in capability. And maybe occasionally we are humbled by their capability in credit. We pride ourselves in Kenya as having the best credit team headed by Elizabeth. I saw Elizabeth in the room. Where are you? We pride ourselves on what Elizabeth have been able to do with her team, and now reinforced by Rohit. But we have found a bank with a better quality in a more challenging environment. This is a bank that has focused on SME, and that is what constitutes 70% of Equity Bank's assets at the moment. But this bank, that constitutes 100% of its assets. So the risk I would talk about is low. It doesn't have the 10 million customers that we have. It has 170,000 SME customers, but it's bigger in size than Equity Bank, Uganda, Rwanda, and Tanzania put together. You can imagine what I was saying, the counter effect of currency fluctuation suddenly becomes an advantage to Equity Bank. So that is the opportunity we see. This is a bank that has demonstrated the German discipline. And this is a bank that is regulated by the German regulators. It's not because it's a branch of an international bank, a German bank. So Basel II fully compliant. This is the only bank I've seen that has 100% coverage on NPLs. I've never seen such a bank ignoring all the securities. We thought we were doing very well at the 93. They have covered 100%. So that is the bank that we are buying, with 36 of its management team having undertaken a 3-year training in Germany. So the quality of the skills and the competencies is what has attracted us. That is the competencies that Equity has built through hiring. They have built the skills and the competencies through training. They have an institute in Germany for training, and each of them has gone through a 3-year program to ground them. This is an institution that beats us in selection matrix and criteria of staff, and we admire what they have been able to do. So when we look at the values, when we look at work ethics, when we look at the performance culture, when we look at commitment of the team, the bank we are talking about in Germany is committed to creating centers of excellence around the world in terms of SME banking and microcredit. And that is what its reputation over the last 40 years is all about. And so that's the asset we are taking. As you have heard, this is a public company. It's not an NGO like we did in Uganda. Skills and competencies. It's not personal, it's not private, it's a public company. We looked at the shareholders and we were amazed that we somehow share some shareholders. And for that reason, we said most likely will not take 100% of this company. We'll retain a few of the shareholders that we share at the moment in Equity Bank. People we have long working relationship, as again to demonstrate how people can work together. So let me introduce, and Alex, now you can go to the slide, the company that we are talking about in DRC. And this company is called ProCredit Bank Congo. And ProCredit Bank Congo is owned 61% by ProCredit, and IFC, as you can see, 9%, KfW, the German. Those are two companies that we work closely with, who are associated with the shareholding of the bank, and who we have long-standing strategic partnership. Remember, we have $100 million credit facility from IFC and a similar one from KfW. These are partners that we know each other. So the question of selection. I want to talk a little bit about ProCredit and my experience with ProCredit. My relationship with the ProCredit started back in 2000 when I met Martin Holtman, who was working with the holding company of ProCredit. And he's the one who did my first strategic plan. Today, nearly 16 years later, we're still good friends. Martin introduced me to Africa, and he did the first valuation that got Africa to buy 16% of Equity Bank. He's now working with IFC in charge of, so you can guess maybe where the tips of viability of the investment came from. And so we have that great working relationship with them. So ProCredit is a specialist banking group that focuses on SME and is known worldwide. As we said, clients 170, pre-tax return on equity in dollars, 19%. So you could imagine what, if we brought the economies of scale that associates with equity, you put these, it might humble our 30% return in Kenya shillings. So we are very confident about this opportunity. Net present value, $28 million. And we talk about assets of 213. That is as last year. So when I said that now, we're talking of a fairly larger figures, but this is the audited accounts. We see the strength of this bank in its management team. And if you look at the management team, starting with Philip, Philip have served with ProCredit for the last 18 years. Celestia, like me, used to work with Ernst & Young in Congo, and then eventually became a banker and is a current managing director. And we have a team of 4 that we can vouch about. A team that has agreed to continue to work with us. So there's not much disruption. It's just more of continuity and strengthening. The key strengths that we see in this company is a very strong business strategy and business model. It's a replica of Equity Bank. Our strength is on strategy and business model. The second one is strong institutional capacity. It's what we were talking about, people, systems, innovations. In actual fact, seeing ProCredit with a broad equity, you will not distinguish it. Maybe it's our lost daughter that eventually we are getting back. You cannot tell between. And the last one is a reliable risk management and control environment they have created over the last 10 years. That is what we are building on in our endeavor to look at ProCredit. If we turn to the next page, and you can look at the financial performance. If you look at the curves on the loan portfolio by segment and look at that growth rate, it's exactly like the equity curves. If you look at liquidity, it's a liquidity in excess. If you look at it's of almost 50%, is exactly where equity has been in terms of liquidity. So we look at this and say exceptional, sustained growth rate over the last period. So when we talk about Congo, that is what Congo can offer. So some of us, when Congo is mentioned, see risks. As you can see, ProCredit saw opportunity. That is what we have also chosen to see. The opportunity of sustained growth over a long period. Again, enormous capability in the staff. If we move to the next slide, and we look at the rationale of acquiring this, you look at everything that ties with equity. The first one you can talk of is a fast-growing economy. Kenya, we are very excited that we are reaching 7. They're already at 9. So essentially, this is a faster growing economy than the market we know, and slightly faster than already Rwanda, which has been known to be growing a little bit faster. The second reason that has attracted us is attractive asset with a significant scale, an opportunity for scaling. The asset is bigger, as we said, than Rwanda, Tanzania, and Uganda almost put together. Impressive performance. We have seen the curves of performance. Significant non-interest income. Again, the strategy of equity where interest should only contribute 50%. So we are seeing an enormous opportunity. Compatible technology platform. We will not struggle to integrate the two systems. We have checked that. And extensive distribution channel of ATMs and other delivery channels, an experienced management team, and a paralleled corporate governance and brand in DRC Congo. That is what we see, and that is what has really attracted us most. And that really then scales us. If we go to the next page, that really scales equity and changes where we are. If we could see, we were initially in the brown color. We now are taking over the Bru region. And you can see it's almost all the countries that we are in put together in terms of the geographical space. But look at that and see the ambition of Southern Africa. Once we establish ourselves in Congo, the next phase of going to Mozambique, going to Zambia, Zimbabwe, Malawi, Angola, it will just be an extension. We share that will enable us, put together with the Tanzania, to say we'll be sharing borders with all the other 6 aspirational countries. And so you could see it, we couldn't have got a better springboard to be able to go to Southern Africa, which is our next stop. So basically, that is what we are seeing. The opportunity is enormous. And if we go to the last slide, we'll see that is the shareholding we said. So equity aspires to take 79. You can see the current one. It will be 79 and be left preferably with IFC and KFW, because these are partners we share the ethos and development attitude, and they are already, we are working with them, and we'll be able to grow together. Today, we are very privileged to have with us one of the directors of ProCredit, Helen Alexander. And I want to give Helen a few minutes, not to show slides, but if she wishes to speak on any of the slides that I've shown you, and tell you a little bit about ProCredit. And if Helen, you can also be kind to say why you have agreed to pass over your daughter to us, we'll appreciate it. Thank you, Helen.
It's always terribly unfair to be not warned at all that you're being invited to say a few words to invited members of the equity team and the press. So he really has sprung this on me. And you can imagine after such a long presentation, it's extremely difficult for me to add anything at all, except to perhaps put a human face to the German cousin that's being invited to such a large family gathering. And as always, as coming to a large family gathering that know each other terribly well, one always steps into something like this with a degree of trepidation. And I guess I would simply like to stand here today to say a few words on behalf of ProCredit Bank, and hopefully to encourage you to embrace ProCredit Bank, because I think your attitude towards ProCredit Bank will be absolutely critical towards its success going forward. I will not dwell on any of the particular slides that Dr. Mwangi showed, but perhaps just a few words to emphasize from someone who is ProCredit, what is ProCredit, and hopefully why I think it's a good fit with equity. And I think Dr. Mwangi very much emphasized the key things that I think make ProCredit different. One, it is part of a global group. So when you talk about multiculturalism, we also live multiculturalism. ProCredit belongs to a family of 20 banks based out of Germany. We introduced the same German standards in every single bank we operate worldwide, whether it's in Congo, Germany, Romania, Colombia, we have the same standards. And sadly, it's no longer Basel II, it's Basel III and Basel IV. We are almost compliant with a tremendous amount of effort towards that. The other point we very much pride ourselves on building very transparent, very responsible banks, very much along the lines of Equity Bank. We are deeply committed to our clients, particularly to SME clients and microfinance clients. We are deeply committed to our staff, just as Dr. Mwangi described the level of investment we have put into our staff worldwide. We were deeply committed to Africa. We started the bank in Congo in 2005 with tremendous ambitions to expand in Africa. And you might ask, if everything's so great about ProCredit Bank in Congo, why are we selling? We're selling largely because the group has decided to focus on Eastern Europe So our operations in Germany, the European Union and Eastern Europe, and therefore to exit with great regret. We are very, very proud of what we've built in Congo, but have decided to exit Congo. Once we took the decision, why exit to equity, since Dr. Mwangi, you asked. Interestingly, this was a joint decision with management. We looked at the world, and it was quite a lengthy process. We were supported by IC Securities, our broker in this process. But I have to say, the day we met Dr. Mwangi James, the discussion was over. It's a fascinating process. You can do all the due diligence and you can do all the analysis and you can, analyze the world and who's the ideal buyer. But in the end, it's about people and it's about passion. And we met James, and to be honest, the discussion was over. We've negotiated very hard over 6 months to actually obviously pull the deal together. But to be honest, we then presented the management team as well as our shareholders with a choice of buyers. We had choices. We had other attractive offers. I think it's obvious why we wanted, in the end, to sell to Equity Bank. As I say, it's about people, it's about vision. Obviously, equity brings a lot of things. All our management board can say in ProCredit Bank nowadays is we want to do what Equity's done in Kenya, in Congo. It's obvious, it's easy. And Equity Bank brings a lot of expertise, vision, capital, experience, all of these things. But above all, I think it brings a commitment to what our people believe very strongly is above all to do the right thing by clients and to do the right thing by the country in which you're operating. Opportunities, I always feel, can be very sexy and they can lead you down the wrong path unless you have a very clear moral compass about where you want to take it. And I think the management board and the whole team in DRC, and I know some of you have met the team, and I have to say, when they came to Nairobi, again, all discussion was over. They enjoyed coming to Nairobi so much that it was then very, very difficult for me to persuade them to even consider any other option. But I think it really was, above all, the passion and the commitment to clients in the country that makes them very, very excited about the future. And I think if we, ProCredit Bank and Equity Group Holdings, can fulfill half of the ambitions that we've been talking about over the last few months, I really do hope ultimately that you feel you've bought a German gem, which will very quickly be part of the Equity Group. And I really do invite you to embrace them, to be part of your future, and for you to help them succeed. That's what I would like to say on behalf of.
Thank you, Helen. So if you thought there were challenges in DRC, Helen has already conquered them over the last 10 years with her team, and we're very excited to see. We started Uganda 2006, 2008, and you can hear they are bigger than Uganda, Rwanda, and Tanzania put together. That has been the amazing achievement. And that time the economy was growing at 2%. The pace of 9 only started about 4 years ago. So we're very excited that we would be able to do. The team that has been mandated by the board to execute, let me introduce them. Maybe the directors of the group, if you could come quickly in front. The group directors, Ron, quickly, so that it's not my mandate. It's better to show you the people to be asking questions. Julius, don't keep on sitting down with Charlie. So this is the team that has been mandated to join Anthony and Anthony to put up this together. And in absentia, let me introduce John Staley. I can't see John Staley. Oh, he's there. John. Very good. John is the one. John, step forward. John is the one who has been given the mandate of capital allocation and appropriation. So whatever resources they require, John has been added that. The systems, Ukai, he has been told to fix the system as soon as possible. But before he fixes the system, Elma has been asked to create the architecture that they must integrate business together. And the next person who has been is the strategy starting with Mary, execution of operation, Batesh, and then Lon has been asked to ensure the payment system. What we talked about is a big country. It's Europe minus infrastructure. So he has to create virtual infrastructure. Those who know Ron was the chief technical officer of PayNet. So if you remember now, we have just somebody who focuses on nothing, that the channels in the bank. Lohit, as we had, is an SME bank. He has been told, look at that SME and how they are doing. He'll be in charge of credit. Charlie is this. Now, this is an amazing one. Martin introduces me to ProCredit opportunity. He's working with Charlie. Charlie has been seconded to Equity over the last 1 year by IFC to help us create our group risk framework. And then he's persuaded by Ruben. Where is Ruben? By Ruben to stay. And Charlie joins as the chief risk officer. I never thought Equity could be able to poach from IFC. It's over and done. So that's what Charlie's experience will be. Of course, our long-serving, 13-year serving chief internal auditor, the board has been very kind. And Mr. Munga, we are very grateful that you found Fuamba Bildad fit to become the chief group internal auditor. Of course, we were very lucky. NIC decided to donate its managing director to come. And for the first time, we have this investment being analyzed from within. The party was Mary and Wilson, who did, he's the managing director of our investment bank. Of course, Ruben is the one who have assembled this team. Helen, who look at the brand and how it would look. So Helen looks beyond wings to fly. People think Helen is equal to wings to fly. Helen's bigger responsibility at the group is organizational brand and extend it to culture. And of course, Julius, operational performance, is the one who is focused on that. And then on a day-to-day from my office, Anthony Ituka is the one who is looking at the subsidiaries. And of course, last Anthony is doing the finance director job for the group. So that is the team that has been, and now this is their first delivery. This is their first delivery. So they're the ones who have been mandated, and as you can see, the team is in place. So the cost-income ratio, you can now see is starting to go down because we have been taking care of them without bringing on board additional business. They found all the others. Now they have done their first assignment. And you can trust that in 10 years, they will have put their additional 10 subsidiaries. And they do the oversight. They're doing very well. We are very impressed with the performance of the existing subsidiaries. Why? Because of the support they're receiving from this team. Oversight. There's nothing about a loose subsidiary. They are all now, these are the shepherds of the opportunities that the board has identified. I'll keep them here because during question time, each will take their question. So I want to open this opportunity for questions and take the mic to them. So if there are questions, then maybe we could try and answer. And some can also be directed to Helen about DSC. Thank you. No, this is yours.
How much of the
the fund you are given by the shareholders to deploy on expansion will be eaten up by DLC.
I don't remember very well how much it was, but assuming it was 200 billion Kenya shillings, how much of that 200 billion is being taken up by this move? A question that you may share with your German friend, I forget.
Helen Alexander.
Helen Alexander, is that as you saw David Ndei comment the other day, equity and probably your other friends, he claimed that you an expansion binge, but what happened? You deploy technology, it is to solve the problem of congestion. The people usually rush in fast. The equity bank model in Kenya was that you over-evangelized about your mission to the people, and therefore the people probably running ahead of you. Is this something that will be replicated in DRC?
Thank you very much. It is true what George has just said, that when we introduced Kenya because we were market-led, the market responded with a force bigger than our capability. And consequently, we had long queues and not a very good service. And we lashed after the customer. We were always trading the customer until we hit on the innovations of mobile banking and agency banking. As Dr. D said, queues are something now almost of the past. Why? Because we have 20,000 agents now complementing the 240 branches. So you can see suddenly that eases the. We are hoping and pray that we will be more attractive because, as I said, a net interest margin of 21% is too high. We are used to 10. So if we go and pass huge benefits to the customers, and 85 million people approximately choose to walk in, this time Airtel is on the ground, mobile banking, and I want to really remind George, test it with EqualTel, see what is there. And two, agency banking. As we said, Mary has been in meetings with the regulators, and we think they are open to agency and mobile banking, and that is the best way to cover a country with poor infrastructure. Remember, when we were asked by donors and government to do social payments in Northern Kenya, that is the program we adopted, and the problem of social payments were overcome in this country. So we rely on that. But now, remember, that time we were coming from technical insolvency. And we were raising little. 2002, as I said, when we sold the 16%, we only got $1.6 million. 2007, when we sold 25%, we only got 11 billion shillings. Now you can see the shareholders have allocated to us 200 billion capacity to execute this strategy. So we have the resources. Two, my team leader, for credit, Abros a lot of respect, was Abros Gali, was the chief credit officer at that time with Gerard. Where is Gerard? He was chief operations officer. And my friend Alex, where are you? There was the chief accountant. You can see how much we have built on capacity, globalized capacity. So capacity, systems, resources, human capital will be able to meet the challenge, because it's a challenge we would like to have. We will try as much as possible to be as attractive to the market as we can be. We're also very lucky. We understand the government has just passed a legislation that for the first time, they will no longer be paying people cash. Civil servants in DRC have been paid cash. They now have been asked to open bank accounts. And we are lucky. We're just entering when they are being asked to. So what does it mean? We have allocated for this project and I don't mean purchase price. We have allocated this $60 million US. That's about roughly 6 billion shillings to ensure that opportunity is tapped into. That may include a little bit of increasing the branches aggressively and strengthening the systems, capabilities, and the channels of the bank. Is there anything, Mary, I've left out?
Not really. If you look at what we've been able to achieve already in Tanzania, which is also a fairly vast country, we are not expecting to grow as many branches as we did in Kenya, because we have already discovered the power of the alternative delivery channels. We are growing the agency. It's becoming very, very popular with the customers, and they love that channel because it's the most convenient channel for them, especially when you're talking about the rural areas or also the suburbs. You do your banking in your environment. And we've been able to demystify banking. So people don't have to dress up anymore to go to the bank as they had to do before. So we cannot underestimate that impact. We have already seen it happening. So we are hoping that we'll be able to create a few hub branches in these countries, but then support them with a large network of other delivery channels and payment systems. And that is what we have been creating, as you are aware. So we'll really just continue with that strategy. Thank you.
Lon, do you want to emphasize on the payment opportunity that you see in the massive DLC?
So, certainly, we've been putting huge effort into getting, I don't know if that's working. We've been putting huge effort into getting the mobile channels working across all of the mobile types that we have out there. For the high net worth customers, if you need an app on an iPhone, we have it. The explosion of Android-based smartphones that are getting cheaper and cheaper, we have it. But if you just have a simple feature phone, we have the solutions for that as well. Our partner Airtel, being in country, makes the provision of the communication channel and the delivery channel for these mobile services, be their agent or the services the customer use, that much easier for us to do. It's a partner we've worked with, they know us, it makes the deployment of those applications far simpler. And then all the other electronic channels, ATM, POS, these are areas where ProCredit are also already well advanced, and our ability to dovetail those into our own initiatives is going to be that much simpler. So we see a tremendous opportunity for payments in an area that hasn't yet benefited from this form of technology. Thank you.
One area that we will also enhance a lot, and John will speak a little bit, is the ability to also tap into the German risk management model, because it was fully implemented into the system. So essentially, that will now be one of the takeaway that strength that would then put into the whole group. I don't know, John and Charlie, whether you want to comment on that risk management capability that we have seen.
Great. Good afternoon, everybody. We're very excited about this acquisition as a team because, as Dr. Mwangi said, this is not just about us taking stuff to them, it's also about them bringing stuff to us. And we believe we can learn a lot from the team. They were the first to introduce mobile banking into Congo. So they have mobile banking, they have Visa, they have MasterCard. They were the first to roll out ATMs. So in a lot of things, we can just grow on what they've already done. But ProCredit history is in credit. And where ProCredit has been incredibly strong over the years is in sophisticated scoring for both retail customers and for SMEs. Latter years, they focus more on the SMEs. So we're very excited because we think we can bring quite a bit to ProCredit on the retail side, but we also believe that we can learn a lot from ProCredit on the SME side. So this really is a very, there's a lot of synergies in this transaction. So as a management team, incredibly excited as to how we can put those two together. Thanks very much.
Very good. And any other question? Thank you. There's a question at the back there and another one there.
My name is Bella. I work with Citizen Television. I just wanted to know how deep is the mobile penetration in DRC?
Thank you very much. How deep is the mobile penetration? John, do you want to answer that? Even Helen wants to add.
This is teamwork.
DRC is very well penetrated now from a mobile point of view. You've had Vodacom from South Africa, you've had Airtel, and Tigo, and they've all done a pretty good job in rolling out their services. So yes, it's a huge country, as James said, the size of Europe. But as we know with mobile technology, it can be based in small villages. So the actual percentages I haven't got on hand, but I'm not sure whether Helen can.
I don't have the percentages of mobile penetration, but it's increasing very, very quickly. What I see is the key challenge is to make the link between mobile penetration and payment systems, which hasn't been made at all yet in DRC. And I share the gentleman's first challenge of how you mix quality service with mass service, which is the challenge for all banks on the continent at the moment. When we opened the bank in DRC in 2005, 2006, we had queues of 3 hours, 4 hours, because we were the first bank to open bank accounts at all for people in the DRC. We learnt by introducing, we did, as John mentioned, pioneer cards, ATM, POSs. So we almost do no cash transactions at all anymore. It's all done through ATMs. But the big challenge is really bringing agency banking in and payment systems via mobile, because the stage where the mobile networks are at is they're not yet there with payment systems. And I think that's why the team is very excited about working with Equity Bank on linking payment systems with mobiles.
Yeah, great. I think there's another synergy. Helios, our shareholder, is managing the towers through Helios Towers. So there's already a tower company in DRC, which enables the mobile networks to grow a lot quicker because they don't have to deploy the towers on their own. And with all the technology we've been working on, the card associations are also very excited to see how we can now take the next step, because there's not a lot of physical plastic being issued cards, and there are not a lot of points of sale. So we believe we can leapfrog and go to the next. So DRC has all the ingredients to make it work, and we think we've got the right tools to actually do it. So watch the space. I think it's very exciting.
Come again? Yeah, provide the data.
End of 2014, mobile penetration in DRC, 44% of the population.
So 4% bank penetration, 44 mobile penetration. You can imagine riding on a mobile, what it may then mean in terms of opportunity. So George's fear is true, but we'll solve that using mobile and agency network.
My name is Wahito from Capital FM. When do you expect to start operations, and by how many branches? I'll be grateful for that.
Thank you very much. We hope to start operations as Equity as soon as we are given regulatory approvals. We are very optimistic that we'll be able to put our paperwork together very quickly. To get the approval. We have sensitized the regulators. We think we have a very good proposal, and we are optimistic that within 3 months we'll have closed the transaction. But remember, we are operating under the Brad ProCredit Bank Congo at the moment, so it's just enhancing. Let me take this opportunity then to introduce the people who are helping us. John, do you want to give John the mic? He tells us a little bit. He's one of the advisors. John, briefly, because there will be a very big fee of advertising if you choose to do that.
Good afternoon, everyone. I'm pleased to be here in the middle of what I call a very exciting time, not just for Equity Bank, but Africa, broadly speaking. To have served as a broker in the deal where a Kenyan entity acquired a German business based in the DRC was quite interesting. James, I hope I did a good enough job to hide the excitement or the decision to go with you from the very beginning. But no, it's quite amazing. I think we reached a great outcome in terms of finding a great partner for my client, and one also where I believe all the stakeholders' interests will be best served. I think it's very exciting times for Equity Bank, and I'm looking forward to watching this transformation over the future in the DRC. Thank you.
Thank you, John. Where is Michael Dako? Together they are partners from IC Securities, and we're really grateful. And then of Chris, Chris, maybe you take the mic. Lawyers don't like talking much, but I think...
Good afternoon, everyone. I'm Chris Halliday from Eversheds. We were the lead advisors on the sell side. I have nothing much to say other than over the last few months, I've witnessed the transaction evolving. I've been hugely impressed by the interest of all the parties, the professionalism shown. I've advised on transactions around the world, and I have to say this one has been a real pleasure because of the positivity of everyone involved, the excitement that I've sensed around all the tables we've been negotiating, and it's just been a fantastic deal. So I'd like to add my congratulations to everyone here today. Thank you.
Thank you very much. Losa and Jacob, where are you?
Jacob has to come because he's the brains and I'm the beauty.
The beast and the
I'm Rosa Ndwati Mutero, and this is Jacob Ocheng. We are with the firm of Anjawala and Kana. We have been advising Equity Group on this transaction, and it has been a very good transaction in terms of negotiation. We have come a long way. We have had good partners in Eversheds, John and Helen, and we're excited to have come this far. Thank you.
And last but not least is our own advisors that we would recommend to Kenyans to start using. Equity Investment Bank, Irongo Nyakera and Anthony Gugi. Where is Anthony?
Thank you. I think in my negotiation class a few years back, I learned that the best deal is where both sides end up very happy at the end of the deal. And I feel that's really where we got on this transaction. And so looking forward to seeing actually the real transformation.
Hello guys, this was a great experience working with a great client. Obviously Equity Bank or Group is our client, and they're actually very demanding, and they brought the best out of us. Thank you.
Okay, thank you very much. So that is what Wilson learned at Stanford, that make the client happy, and then you have won. Alex reminds me that those with the cameras wanted to see the signing, and then we can continue with the question. Is that okay? Very good. So let's sign.
Sign with the date. You want a big thing?
So, any other question? As you prepare for the question, we just wanted to see how close DRC is to Kenya. And we sent Gerard Waroe and Elizabeth Gathai to go and explore. I want to ask them to come. They are being congratulated both by the chairman, but Elizabeth and Gerard, if you could come and tell us what you saw and how you compare DRC with Kenya, it'll be interesting. So, Elizabeth, go first.
Good afternoon. Thank you, James. I think for us it's very exciting. When we went to DRC, what was most exciting thing is when we landed there, we just felt like we were in Equity. And what was so seamless is the alignment of the mission and vision of that institution with our own purpose and vision. And that I would say is what was most attractive to us. We managed to interact with customers, we managed to interact with staff, and the only difference was the language. We were speaking English, they were speaking French. So this marriage is very exciting for us. Thank you.
Good afternoon. I think as Elizabeth has said, we saw a lot of similarities between Kenya and DRC. We had a team of about 15 from Kenya. And what was also very, very exciting is actually the kasha by the staff. Everything was resembling the Equity kasha, from the management down to the cashiers. And the other thing that was also very exciting, even from the airport, is the opportunities that we saw in that market. In terms of the numbers, all the way to the hotel, we are seeing customers. And we are seeing numbers. And there was a lot of similarity. Even the small businesses lined up on the highway. So to us, we are only seeing opportunities. And when we heard about the penetration, we realize it's a market that is live for Equity to go and unlock the potential that is there. So thank you very much, but we really enjoyed. I think, and as Elizabeth has said, it was only the language, but a number of people are speaking in English and some in Kiswahili. So again, we saw a lot of seamless in terms of us going and fitting into that market. Yeah, thank you very much.
So there's a press release out there and a copy of the presentation we made, but we also want to extend an invitation. There are bitings, there's drinks, then we socialize together and can ask the questions. My leadership team here is there. As you heard, even the Kenya leadership team led by Gerard went for a Renaissance visit. They really have depth, and the executive have already been assigned specific responsibilities. So over the drink, then we could really have this excellent opportunity to interact and get specific answers answered. Thank you very much, and we are really grateful for your coming. Thank you.